Hi, this is Kerry Artak with Wicked Stocks bringing you the Daily SPY Report for Thursday, January 27th, 2022. Before we jump into the charts, just as usual, want to encourage you to please click like each and every time you watch the Daily SPY Report. It does help us out a great deal in getting the word out and being found on YouTube. Also, subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the Daily SPY Report. And so seeing it before the open bell the next day is obviously important, right? And so you want it to be fresh and relevant when you view so that you can use it for your trading or analysis. So let's take a look at the charts. Just a reminder here that was last Friday that we settled below this significant formation that today is at 441.68, and below which we are in the midst of, I'm going to start saying a 2 to 3 week sell signal now, especially with the SPY. I think 3 to 5 weeks with this heightened volatility, I'd be surprised if we didn't test the mid to upper 390s, that objective over the next 2 to 3 weeks, given what's been happening just the last few days. And this remains in effect below 441.68. We did test this area amply on Wednesday, Fed time and so forth, pushed through it a bit. It may have been uncomfortable. May have challenged the day traders, but position traders, that was a great opportunity to get short and to stay short into February trade. Now, the weekly chart, I should throw this out there, and I'm actually going to put this on the support and resistance level when I'll show you in a moment. It's also at 442.76. So, on Friday, if we were to close above the 441.68 formation, I'll really be saying 442.76, and that is at the end of the week. That would be tomorrow, Friday. This is today, Thursday. So 442.76, also part of that resistance area that can contain buying through February, below which the mid to upper 390s remains a 2 to 3 week downside target. For the upside today, if we happen to push or open above 441.68, well, actually, let's just put it this way. If we close above 441.68, because we are so far from it right now that, yeah, we can push through it, but it is the settlement above 441.68, and once again, I think also above 442.76, that should then yield, possibly tomorrow, Friday, could take several days to reach into the mid 450s, where we can top out through next week. I will say, as I have been, that if we do close back above that 441.68 formation, it likely is a good move low, probably good through Q1, but the real indicator for me would be closing back above 456.91, and then the market just sort of peels away to the upside, and I think pushes then into the mid 490s over the following 3 to 5 weeks. But we're not close to that at all. We are below 441.68, and this market remains heavy into February trade below it, once again anticipating the mid to upper 390s. Let's take a look at the support and resistance for today. I've got intraday containment levels above and below the market, 438.25 above, 429.65 below. Both are well suited for aggressive day traders. They can contain intraday activity, and if we violate them, we should reach the next emboldened area on an intraday basis. So if we do push above 438.25, I would anticipate another test of that 441.68 long-term channel bottom on the daily chart, which on the weekly chart is at 442.76, as I mentioned a moment ago. And if we do close above 442.76 today, we should reach that 456.91 level within just a few days, where we could top out through next week. But as I've been mentioning, closing above 442.76, we are off the long-term sell signal into the 390s, and then we're just sort of waiting for the market to close above 456.91 for an upside green light into later February. Downside today, if we happen to break or open below 429.65, I do think 421.97 is in reach. That is just off of Monday's move low. 421.97, there's a lot going on there. If you go all the way back, really a year almost of activity back into April of last year, we've got some highs and lows. I don't think it's a significant area. It could contain daily selling pressures again. But if we close below 421.97 with this kind of volatility, I do think by the end of next week, we should actually test that targeted 396.5 to 399.02 area where we can bottom out for the year itself, and from there recover into mid to later year, push on to new highs perhaps within 3 to 5 months. That's really sort of a guess. I'm just going to leave you with this image. This really still says it all. We're heavy below 441.68. If you're a 2 to 3 week trader, you're buying, you say, 400 puts that don't expire for at least a couple of months, so you've got decent delta on the way down, and you're buying them ideally in the low 440s. And then if we close above, 441.98, once again above 442.76, then my suggestion would be to liquidate that long put position and then just sort of play it on a kind of a week by week basis. Getting back above the mid 450s, I think you can buy then 490, 500 calls that would expire over the following 2 or 3 months. But I'm getting deep in the weeds here on option advice. I'm going to leave you with the support and resistance here for today. You can print it off your smartphone, your desktop, whatever the case might be. Please click like each and every time you watch the Daily SPY Report. I will be back tomorrow for Friday's Daily SPY Report. You have a great day.